move on from one set of earnings to another then, and Bata is in the limelight. They too came out with their quarterly numbers where you saw the revenues grow about 37% to 841 crore rupees. The EBITDA as well saw a 44% rise, with profits coming in at a phenomenal 72 crores versus 25 crore rupees. Joining in is Gunjan Shah, the MD and CEO at Bata India. Thank you so much for taking time out. It's been a pretty stellar quarter in terms of your earnings. So walk us through what the demand trends have been like, the footfalls have been this quarter, because we did see, the Omicron variant towards the latter half of December. So did that impact numbers in any way?
No, thanks. Thank you. And good morning to all the viewers and the ET Now team. Right, it's my pleasure to be here. A belated Happy New Year to everyone, and I hope everyone's safe and well. I think we saw very encouraging trends throughout the quarter. It did have a slight amount of impact towards the end, but I think all said and done, I think there was a reasonable rebound in terms of consumer sentiments. We also saw great traction in terms of our strategy of moving towards casualization and sneaker-isation, and that also aided the numbers that you just talked about.
Okay, fair enough. And let's talk a little bit more about your revenue growth then, because pre-COVID it was in high single digits, early double digits. When do you think that we can see that sustainability in your revenue growth, and what do you believe are going to be the factors that will drive this?
So there will be quite a few factors. Just to say in terms of sustainability, last quarter, which was quarter 2, September end, we saw 85% of pre-COVID levels. This quarter, we have crossed the pre-COVID levels. So we are looking forward, notwithstanding the Omicron, etc. But I think there will be a few other levers that are going to aid this entire recovery and most probably a journey even further ahead. I think the one big piece that I've talked about is making sure that the portfolio evolves in line with the consumer needs, right? And we see casualization and sneakerization definitely being a long-term trend. And we are wanting and making conscious efforts towards participating in that aggressively. Last quarter, as I said, the sneakers portfolio outgrew our overall performance, right, significantly ahead. And we see that gap and the lead going even further. The second piece that I see is also the fact that we are looking at the brand equity of Bata cuts across the swath of the the entire India, right? Not only in metros but also down top strata into the hinterland, and making sure that we are available through our franchise stores, through smaller towns, as well as through our multi-brand outlets will be another big lever that will drive this growth journey going forward. The other piece is also the digital explosion. We are seeing continuous traction in terms of our digital business, digital commerce, driven by not only our e-stores, marketplaces, but also our omni-channel delivery from our stores. So all of that combined together, I think, should drive this growth journey going forward.
Good morning. This is Nantara. Now, the question to also ask is, going forward, when we see the revenues come back almost to the pre-COVID levels, going forward, what the markets will want to know, the viewers of ET Now would want to know is what's going to happen as far as margins go. You've seen an increase in raw material prices. We know about your inventory levels. At the same time, you have to also factor in the higher GST regime, for example. Your advertising and marketing spends have also been going up, and the retail footprint that you were just talking about.
Yeah. No, so I think the margins have been actually, while yes, you're right, there are two big factors. One is the raw material prices. The second one is the GST rate for footwear products below 1,000. I think the team has managed an excellent job in terms of navigating through both of these. We see margins being intact and should not get impacted going forward. However, we do see a couple of other levers taking us forward further. One is the premiumization journey that Bata has been on for some time now. That continues and we see that going forward. So that should aid us in terms of average selling prices. The second piece is also a lot of cost optimization measures that have been undertaken during the COVID times, as well as some others that we are opening up, which might be in the levers of basically making sure that our productivity of manpower across front end and back end goes up, our ability to manage and variabilize fixed costs, and looking at material standardization and substitution. I think these should also aid the margin there.
Because we're talking at a time when Mehngai is a reality, right? Whether it's transitory is not the question, it is a reality. So how long can you hold on to the price hikes, or do you have no choice but to pass on the price to consumers, or you're going to offset that with premiumization? What I'm trying to get at is, have you figured out how you're not going to hurt demand?
Right. No, so it's a delicate balance, Nayantara. I agree on that. We have taken price increases commensurate to the factors that have impacted us, but we will also make sure on two fronts. One is that we continue our cost optimization journey, so that should also help us mitigate some of this inflationary impact. The second piece is that we will continue to also make sure that we keep investing back behind the brand. And whether that be in terms of marketing investments, we have just signed on a new brand ambassador, which is Disha Patni. So marketing investments on one side will continue. Our investments in capability and talent will continue. And so it will be a balance, as you rightly said. But we do see that, I think, demand holding on, right? And we are hopeful that basically this can be absorbed. I would also use this forum to also request that while we have taken up GST for less than 1,000 from 5 to 12, I think the time has come for uniformity of GST rate in footwear, which right now is split between 12 and 18. I think bringing that down to a single rate of 12, I think will also aid this.
Yes, indeed. I'm sure that's an ask from the entire sector. But what about your, the kind of demand trends that you're seeing in the smaller towns, the tier 2, 3 cities, and how are you looking at, penetrating further into these small towns?
No, thank you. It's a big priority for us. We are seeing encouraging trends all throughout the last, the COVID times, as well as even the last quarter. We saw that basically the lower tier towns, which is tier 3 to tier 5, distinctly outperformed. And that is, I think, something that we want to leverage even further. I think the aspirations of consumers down pop strata are only going up because of their media exposure, the access to basically internet, etc. And as I've said, the brand equity of Bata extends all across. So we will look at very aggressive expansions. Last quarter, we added our almost largest ever quarter in terms of franchise store additions. And I think the space will only continue going forward. So that clubbed with, I think, a distribution expansion that we are doing through multi-brand outlets will basically help us keep leveraging this trend of lower pop strata towns.
You did also flag off that you are seeing trends on the digital platform do quite well. So can you give us a sense as to what the outlook is and how you're looking at continuing your digital channels, the strong sales momentum over there, how much CapEx you've slotted out for that, and how much percentage of your total sales come from these platforms?
No, absolutely. I think e-commerce is something that is a very big focus area. We have basically continuously invested in that channel, not only from a front-end perspective, but also from a back-end. So whether it be in terms of infrastructure, dedicated warehouses, the right kind of partners who can partner in this journey, as well as in terms of making sure the right talent and org structure is constructed for it. I would say that the driver from the digital commerce would be three-pronged, right? One is going to be making sure that marketplaces that we participate in, we increase our market shares there. The second one is our own e-store, which is showing very encouraging trends. We have just implemented a new IT platform that gives a much better consumer experience. And I think one that we have been a pioneer, we have scaled it up. I think we are now at almost 1,200 stores, which are now offering home delivery to consumers. And it's a beautiful concept. Consumers have appreciated it, and we continue to scale that up. backed by this is also making sure that we are now working on a curated range for e-commerce consumers. Digital commerce requires a different kind of user experience as well as different kind of product profiles. And making sure that we've got the right kind of portfolio customized towards the digital consumer is the other big lever that will drive growth from here.
We wish you all the very best and hope you make many strides ahead when it comes to your business performance.